Welcome, everybody. Thank you so much for joining me. It'll be about an hour, a half an hour or so is what I'm aiming for in terms of presenting the findings that we had from the research that we recently did. And as mentioned, definitely pop your questions as we go in the Q&A, just so we can address those in the moment. Anyhow, let's jump in. So just to let you know what we did, back in July and August, we interviewed 15 financial professionals. Quick interviews, 30 minutes. So we were covering a lot of ground in 30 minutes to understand exactly how, the role the technology plays in their practices, what their preferences are, etc. Just to give you a flavor of who we spoke to a range of different kinds of financial professionals, understanding that in different channels, they're going to have different experiences with technology. So we tried to cover a number of ranges: independent BDs, RIA firms, wirehouse advisors, and also folks with a variety of tenures, firm sizes, assets under management, and degrees of tech savvy as well. And this is our findings. So let's jump right in. We're going to start with laying the groundwork for what the current FP tech stack looks like, right? Just to understand, that's where the conversation started, to understand what is their day-to-day like when it comes to technology. And I'm going to start with something that might look familiar. This is a very well-known, I believe, map of advisor tech solutions put out by Michael Kitz's. It changes every quarter and it just keeps on growing. And I wanted to start here because it really sort of brings to life how packed and how many options FPs have and how overwhelming it is. It's not that every FP is using all of these options, by no means, but this is a lot of technology that they could be using or could be integrating into their day-to-day workflows. So it is overwhelming. And I'm going to boil it down a little bit because this is where we started our conversations with the FPs, to understand where are they spending most of their time? Where are they engaging with fintech on a day-to-day basis? And that's where we're going to start. So just to bring this to life for you, this is looking at their very simplified tech stack, and really at the core, the hub of it, which is foundational to all their technology, are mostly three different kinds of applications, like financial planning, CRM, and account management were the three that came to the fore when we spoke to these financial professionals about their use of technology. Just briefly, financial planning, I think you're all familiar with. It's a very crowded space. The usual players, Money Guide Pro, eMoney, are the two that we heard about the most. Right Capital as well, again, but that's where they're spending most of their time. That's where they're, using content to engage with clients, and that's really core to their day-to-day when it comes to tech stack. CRM also plays a huge role in terms of their day-to-day, and this is where they're spending a lot of their time as well. And the CRM, that we heard about was Redtail, but also Salesforce, which seems to be increasingly courting the financial professional industry and making solutions available for the FPs. And then the last sort of foundational apps that they're spending a lot of technology they're spending a lot of time in is tied to their BD's trading platform, right? So this is an area where they have little or less control in terms of selection of technology, obviously. However, there are some pure RAs that we did speak with who outsource this trading function. Anyhow, so built on top of this foundation of where they're spending most of their time, we heard about other things that they're using considerably. And what I want to start sort of laying the groundwork for is how a lot of these things are intertwined or integrated, or there's a lot of sort of blurring of the lines between some of these apps that they're working with, which makes it challenging, right? So, wrong way. That brings us to the top part of the triangle. So when you start looking at what else are they using, what is built upon that foundation of their financial planning, CRM, and account management? Well, we heard a lot about their portfolio management and analytics software, sort of two categories that bleed into each other a good bit, but where they're spending a lot of the time. They might be adding analytics where their portfolio management software doesn't have enough capabilities, so they're adding on additional capabilities with new software. We heard a lot about marketing and lead generation software as well. And here too, there's a lot of blurring of the lines in terms of what those various different apps can do. And then one thing that we heard a lot about in this research, which is new for me in any case, is the use of AI tools and financial professionals specific AI tools such as Jump and Zox were two that came up. And this is typically technology that's used for efficiency, note taking, etc. And so that's sort of at a very high level, looking at the tech stack that these FPs that we spoke to were dealing with on a day-to-day basis. So what's missing? What is it this is sort of the foundation of what they have, but where do they feel there are gaps? That doesn't mean that they don't exist, but where do they not have a solution implemented? And some of the examples that came up are not surprising. Tax harvesting or tax planning in general is usually an area that I hear about in this research plus in other research as a gap for FPs. Social security planning is another area that they don't have a go-to solution, or maybe have a sort of a collective of solutions that they go to. Estate planning is another. So again, this highlights that although the solutions surely exist, they don't always know of what's out there, because it can be overwhelming to know what can I be implementing, or what should I be implementing. One thing that we heard a lot about in this research is, I have this technology, but I know that I'm not using it optimally. And there's some key barriers to full utilization of the technology that I do have. And this quote here sort of captures what we heard. There are definitely capabilities that I don't even know about, or I haven't even scratched on the surface of, right? And so what's preventing the FPs from optimizing or using their technology to the full? And there are four main reasons. One is the incumbency and switching costs, right? So they might know that a better option exists out there. There might be a better solution for what they're trying to accomplish. But the question becomes, is it worth the switch, right? Is it worth moving to something that I know is better and then relearning something and then reintegrating everything? And often the answer might be no, in which case they just stick with something that is good enough. Overlapping functionality. I started hinting at this. There's a lot of apps out there that you might buy a software package for one specific function, but then you start realizing, oh, it's got all these other functions that I didn't buy it for, right? So that could be a reason that you're not optimizing, or the FP is not optimizing their software. Another one is training and the learning curve, right? So they just don't have the time to learn how to optimize their tools. And then the final one is just diminishing returns. Sometimes good is good enough, and exploring every facet of a piece of software just isn't worth it. One thing that I do want to highlight on is, what can a financial services provider do when it comes to helping FPs fully optimize their tech stack? And oftentimes when we ask that question of FP, they sort of scratch their heads and go, well, I don't know what the role would be. But in this research, we had a few really interesting comments, and I've heard it in the past before, and it's worth highlighting here for the financial services audience. And that's highlighted in training and the learning curve. And this was a comment that I thought brought this perfectly to life. And this FP said, providers understand how eMoney incorporates their product or their strategies, and they'll actually do some tutorials where they help show us how we could utilize our systems more and make our lives easier. And what this does is really bring to life an opportunity, I think, for financial providers, product providers, to help advisors understand how do I actually model something in my financial planning software? How do I do that more effectively? And that doesn't require all the wholesalers to become tech experts, but maybe understand how something can be modeled within a platform to make that product come to life in that platform, as this Wirehouse FP brought to life for us. And it's something that I've heard in other research, and it's definitely worth it's a potential opportunity, really. So let's take a look at the role of technology and how it potentially, or has the potential to, enhance client engagement. It's something that we've heard a lot about from our clients. What tools are used to engage the clients, and more specifically, what are the tools that allow FPs to engage with clients when it comes to specific solutions, specific products. And technology really helps FPs enhance client engagement in sort of two main categories: directly and indirectly. So let me explain what that means. So directly means content, right? There are client-facing reports that really allow the advisor to tell the story, right? And that's storytelling is what advisors will tell you they do, right? They tell the story. Here's your income story. Here are the gaps in your plan, etc. So really, technology that allows them to engage their clients and really see what is going on in their specific situation. Clients love when things are personalized to their own situation. On the directly side of things is also process. So streamlining the client experience. streamlining, making it easier for clients to engage with their finances, for them to see, where they stand, whether that be through these client-facing reports or otherwise. But one thing we did find with this set of FPs is that client access to fintech platforms, in fact, wasn't a huge priority for them. And in fact, in some cases, they said, when access is made for their clients login, for example, they aren't always utilized by the client. And I'm going to maybe chalk that up to this group of FPs and potentially this group of FPs clients, because other research that we've done when it comes to younger generations, the Gen Zs, the millennials, expectations I think will be different. And I think expectations, they have expectations of engaging with on many different levels. So they're not just engaging with the FP, in a Zoom call or on a phone call, but they're having expectations of being able to engage with their finances across many different channels. So although we didn't hear it in this research, it's something that I do anticipate hearing as things progress and as those Gen Zs and millennials become sort of a larger part of the book for FPs, that their expectations for how they engage with their finances will change and will be technology driven. So that's the directly side of things. On the indirectly side of things, in terms of, how technology enhances client engagement, is, these are tools that make it easier for the FP, saves them time. So guess what? If they're able to save time, that allows them to engage and spend more time with their clients. So that's the way they were sort of talking about the way that technology can really enhance their client engagement. And ultimately, those two things combined allow business opportunities for the FP. So let's take a second just to, one question that we often get from our clients is like, well, how are they selecting the technology? What motivates them to take on new technology or address, consider using new technology, third party or otherwise? And I'll start out with just briefly talking about how do they learn about new fintech platforms? And there are many different ways. I don't think any of this is a surprise. The one that we heard about the most was word of mouth, right? So hearing it from other advisors like them, etc. But there are other channels, sales calls, presentations, industry blogs, podcasts, emails, trade, conferences and trade shows. So there's no shortage of how they're learning. Again, so not only are there many options, but there are many channels through which they can learn about what fintech platforms could have an impact on their practices and their clients. So how do they decide? Like, what motivates them to consider a new piece of technology? And I'm going to take a step back for a second because my assumption is, hey, FPs are always open for more technology, right? But then I was reading a recent piece of research that said that only 30% of the respondents in that research were actually very open to taking on new fintech platforms, which was a surprise to me. But when I sort of stopped and thought about it, it kind of makes sense. Think about the platforms they have access to, the tech stack they already have, and how overwhelming that is. But to add technology, there has to be justification. What is the benefit to me? And there are sort of three main things that FPs use to sort of measure whether or not they should be considering a new piece of fintech into their tech stack. And the three were, does it help me do my job, right? Does it save me time? And I'm actually going back up. Does it help me do my job means, does it help me be a better FP? Does it help me be a better fiduciary? Does it help me make better plans? Does it help me understand my client's financial situation and picture and future, etc.? The saving me time is obvious, right? Technology helps them do things more quickly. Or, we heard from a few people who said, I used to do this in Excel, and then as my business scaled, I couldn't do it in Excel. So I brought on a piece of fintech that allowed me to do this on a more scalable level. And then the third main theme we heard about in terms of being able to justify new fintech is, how does my client benefit? In which way are they benefiting from my taking on this? Is it more visualization? Is it better plans? Is it whatever it happens to be? But how is my client benefiting from this? Because they're at the end of the day at the core. So those are the three main things and then you might wonder, like, well, so why should that matter to a financial services provider? Well, I think as financial services providers are thinking about thinking about technology, developing their own technology, these are sort of at the fore. This is using the FP's lens to think about, how is this technology going to impact the FP? How does it help him or her do their job? How does it help him or her save time? And how does it help the FP benefit their clients, right?
Hey, Catherine, have a
Yeah.
question. We have a
Oh,
question.
yeah.
Are FPs who work for wirehouses usually dependent on the
Yeah.
firm leaders to determine their tech stack?
Yes. As a short answer, very much, they're very much restricted. In fact, I've got a slide coming up, so I'm gonna answer that question when we get to it. But to answer your question just briefly, yes, they are much more restrictive in terms of what they can and cannot put into their tech stack, and are often dictated as to what they can and cannot do. And it's not only the wirehouses. I would say it's wirehouse and some of the independent BDs and the regional BDs as well. But I'll go into detail when I get to that, if I may. But thank you so much for your question. Um, so these are the three main things. If they have the flexibility, so good question. The next layer, so if it answers those three things, so it helps me do my job, it saves me time, and it could benefit my clients. Now what, right? If they have the flexibility of choosing. There's sort of six main things that came to the fore. Cost, obviously, if that's a consideration, it was for most. Compliance, ease of use, how easily can I learn it, right? Integration, we'll spend a whole section talking about integration, and how is it integrated with my other technology. Support, do I have support from the provider? Do I sit in a channel where I have support from my own IT team? And then vendor reputation are the things that we heard in terms of other things they're considering when it comes to, taking on new fintech. However, to the point of the question, with advisors who sit in certain channels, this is the slide I was getting to, is that it's not just as easy as saying, "Yep, I want this software. I'm going to bring it on." Many of them have to either get approval, if they can get approval, or they may not have the approval. So let me take you through this sort of left to right, from most restrictive to least restrictive sort of spectrum of being able to take on new fintech. Over here on the left-hand side is the most restrictive. So those were FPs who sat at a broker dealer, a wirehouse, or even an FP network that required proprietary tools. And restrictive sounds kind of negative. However, there was one gentleman who is now an independent, who used an IRA, and he said, when I used to be, and I forget where I used to be, Morgan Stanley, I think it was, I I I I had a system where everything was integrated. Everything was sort of dictated to me, but everything was integrated. So it made my life easy. And it sounded very much like he lamented the fact that now everything's a little less integrated, a little less talking to each other. So there are definitely benefits to sitting in a channel where you are dictated in terms of what you can and cannot um, use, right? And I'd say that it's potentially, actually, let me come back to that. Let's couch for that thought. But that's sort of at the left-hand side, so most restrictive. And then as we go to the right, they might have a little more flexibility. They might be given, here's a white list of certain tools you could use, and you had to pick one, but it was still quite restrictive. Then you've got, I have this tool I'd like to use, and I need to get it approved, but still that gives the FP a little bit of flexibility if they want to try a new AI note-taking tool. This allows them to, come up with the technologies. It fits those criteria that we just looked at, and now bringing it forward to their company, to say, hey, listen, maybe this is something that we can consider. Similarly, firm partners might discuss and vote on new tech. And then way over on the right-hand side is the least restrictive. This was typically the smaller shops, the one, two-person shops where they're just looking at technology that could benefit them as a firm, and bringing it on and purchasing it and leveraging that technology. What I do want to highlight, though, it's kind of interesting, like, because I always, as we did this research, I was always trying to think, what does this mean for the financial service providers? Like, what does this kind of spectrum mean? And when you think about the broker dealer, like the most restrictive side of things, so broker dealer, wirehouse, FP network that really dictate the software. It could be an opportunity for the financial services provider to better understand that technology map of those firms and integrate either directly or integrate directly with a third-party fintech that has been approved in those environments. Because then you have access to that whole host of FPs who are sitting in that channel. So let me move on to integration. So integrating across the tech stack. This is, this is the question that we were asked a lot. So integration for integration, integration has to have a goal, right? So do they need all their tools integrated? No, but they would like to see things that are integrated to add value and to increase efficiency. So there are certain things that make more sense to integrate that they want integrated, so that tools are talking to each other and that data is flowing and there's as little manual work as possible, right? So the question, actually, that's not, uh, in terms of the integration, there is a sort of a mixed experience and mixed expectations. So those expectations of data integration when it comes to fintech and having all those tools talk to each other really tends to vary based on the following things. Based on platform, right? Do they expect that all of the platforms they're using are able to talk to each other? No. But are there certain ones they'd like to see talk to each other? Like, could my CRM and my financial planning software be talking really closely and sharing data? Yes, that's great. Or my CRM, pardon me, my financial planning software and my account management software. Yes, there are certain ones where they really want, and they do typically integrate between fintech platforms. Channel is another one. Again, as I mentioned, certain FPs in certain channels have a higher expectation for integration because that's been their experience. We spoke, some of the FPs that we spoke to were like in the Edward Jones channel or Morgan Stanley. They had that experience, and their expectation is that the technology is all talking, and that data is shared, right? They also happen to have IT departments that help support that level of integration. Type of data is another one that, expectations are higher and lower, like certain data, like data that's maybe changing more quickly. That data, the integration expectation is a little higher than data that is not changing as frequently. Historical expectations, as I mentioned, there are some that have that, experience in certain channels, and that's their expectation of integration. Or, there are certain expectations when it comes to a certain kind of data, like insurance data, annuity data, have historically been less integrated, and then the expectation is also a little bit different. And then FP awareness is the last one, just their own awareness of what is possible. It was definitely one in terms of providing sort of a mixed view in terms of integration expectations. So what does integration actually look like? And I'm going to bring up a map that hopefully isn't too crazy. So this is looking at all the different things that they're working on. And in the middle, we have the hub, right? Two of the three things that we mentioned in the hub, the CRM and the financial planning software, right? So the goal that data is flowing from financial planning into the CRM, but then we also have, the AI assistants that we talked about, having that kind of content be integrated into their CRM so they're not having to manually transfer things. And as we do this, you'll see like all of this is about increasing efficiency, having data flow so that there's less manual entry, fewer errors as well. So let me just fly through this real quick so I can get to some examples. So AI assistant, lead generation and marketing, that's pulling client info from the CRM and using it in the marketing content so that all of that is flowing, scheduling email updates, prospects. Over on the account side, we've got the account management where their, specific client assets and positions are fed into the financial planning software. Portfolio research and design is communicating with the account management software. You have reporting if they're using something like Quanti, that is more specialized reporting. That's pulling information from the account management software, and that's then maybe feeding it into the CRM. So this is the way a lot of the integration that's out there today is functioning. There was, one thing that was consistently sort of off on the side, like what's not integrated? What is done more manually, and that's where those outside accounts happen to live. That could be banks, retirement accounts, mortgages, and then life insurance and annuities often fell into that category as well, where it simply wasn't integrated. It was something that was, here's my client's portfolio and here's how I engage with my client, but then I have this sort of one-off for insurance and outside accounts and insurance and annuities. So there's just that manual step that is not including it's not being integrated into their financial planning software automatically, which is problematic. So when you ask them, what do you want? What do you want? Do you want more integration? Do you want a better website? Because I know that's, financial services companies have limited budgets, and where do you invest? And almost hands down, the general consensus from the FPs that we spoke to is that financial services provider integration into their tech stack, it does, and it could further enhance ease of business, right? So here are some interesting quotes. If they want you to the providers to meet them where they are at. They want them to meet them in their sandbox was one way one financial professional talked about it. Have something that plugs into where I am, plugs into what I'm doing versus having to go out to all the different websites to engage with the financial services provider. And the question that we often get from our clients is, what impact does that have on product selection? And okay, small sample set is what I'm going to preface this with, but it does seem that a number of these folks said, hey, assuming that it's a competitive product, technology integration could influence my product selection, right? If you make my life easy, and well, first and foremost, your product is competitive, right? But if you make my life easy by integrating into where I'm functioning and where I'm working, or if give me a process that's tremendously easy, then that's gonna drive product selection. So it's something to keep in mind in terms of the impact that technology integration can have. And there's some examples that we'll get to here at the end that are annuity specific. But it does have an impact on product selection. So let's talk about annuities in particular and the role of technology in the annuity life cycle and the potential opportunities that exist for annuity providers. Just to level set, we're going to simplify the annuity life cycle into three parts: annuity pre-sale, the point of sale, and the post-sale. So annuity pre-sale, with that I mean, selecting the right annuity, not only at a certain carrier, but looking across carriers, right? Comparing the contracts, annuity illustrations, right? Things that I can use with my client to share and tell them the story, right? So that's sort of the pre-sale side of things. Point of sale. So this is the very tactical stuff: application process, compliance, suitability, contracting, annuity, issuance is the middle piece. And then post sales is annuity statement integration, financial planning software, sub accounts, rebalancing, all that sort of stuff. All the stuff that's once the annuity is in force management is what the post sale servicing is. And as I mentioned, we took the respondents for this study through the life cycle to ask, where is there an opportunity for technology to make things easier? What would you like to see? And in some cases, they asked for things that we knew existed, but they did not. And this first slide really brings that to life. So let's talk about the annuity pre-sale. One of the first things we heard about was, well, it'd be great to have a more efficient way to compare compare products across providers, right? Give me something that allows me to compare, an annuity from carrier A to B to C, right? And right now that's very relationships driven. I call the wholesaler. I hope the wholesaler has an understanding of the whole market. When he or she does, that's great. But it's not necessarily, for many of them, the ones we spoke to, is not technology driven. That said, that we did hear in this research a little bit about technology, like Morningstar was mentioned as having a tool that could do this. But there seems to be a gap in awareness as brought to life with this quote here, right? This quote is saying basically, like, there's no good way to compare annuities across providers. But we know that there are tools. Luma is a tool that I've heard about. FitX is another tool that has come up. Morningstar is mentioned in this research, and that just brings to life that advisors have varying levels of awareness of tools that they could potentially be using and leveraging to compare across carriers, right? And so that's perhaps an opportunity if a carrier is participating on one of those platforms, that they make that a talking point with their FPs to bring to life that there is a way of comparing. Because this is something that we heard about from so many people, just wanting to have an easier way to compare products across the board. Digital access to client-facing materials is something that we heard about here too. Like, give me an easy way to access things that I can easily share with my clients. Again, this is about ease. Remember, they're thinking about technology, making it easy for them so they can save time and get more done. That is sort of a really interesting point. I just saw a question, and I'll come right to it. Just give me 1 second. Let me wrap up this slide. The last one when it comes to the annuity pre-sale is self-service illustrations, right? Having an easy way to be able to self-service and do this. And I'm gonna put a caveat here because I've done many interviews where the FP says, no, I just call the internal and have them run it. But with this group of FPs, and I'm assuming we'll see this more and more, that there is a desire to be able to easily run their own illustrations, and save them time and have access to that when they need it, for their meetings with their clients. And I had a question, and it says, if an advisor does use this type of technology, comparing new products, do they only consider carriers on that platform? It's a great question. And we did not ask that question, but I would assume that if they're using FIDX, for example, as a tool to compare, they will likely leverage that. I'm trying to think of past research. So I don't have an exact answer, a definitive answer, but I would only assume that if they're using that to compare, then those are the tools that those are the annuities that they're going to use, right? Otherwise, and I hear this all the time with annuities, that advisors use the annuities they know, right? And so if they know ones without comparing across the board, they're going to go back to the annuities that they're comfortable with, right? Or they'll, again, like I mentioned earlier, ask their wholesaler for, like, how does this annuity compare to an annuity from another carrier? So a platform like FIDX or Luma or Morningstar that does a broader sort of look at the whole market does broaden their scope. So I'm not sure if that answered your question, Marissa, but hopefully it gave you some insights. So that's the annuity pre-sale. Those are the main things we heard about in terms of opportunities for technology to play a bigger role. The middle part of the process, really the point of sale, is where it's much more tactical, right? So this is where they want ease, like a quote that one gentleman said, I want to know how easy is it for my team to actually go through the application process. Make it easy for me. And what does that mean? E-apps. So Firelight seems to be the industry standard. Firelight is definitely a step in the right direction, in making things easier, and giving folks an electronic way to do the application process. It reduces errors that are potentially going to pop up in the process. A lot of the advisors we spoke to said, if it's a paper app, I might not bother. That just seems not very 2025. So it is something that's becoming an expectation. I've heard Firelight time and time again in other research as being a standard, in the application process. Digital signatures is something else that we hear a lot about. There's a nuance here. Digital signatures allow for, things to flow more smoothly. I have heard from some advisors, not in this research, but other research, that, hey, that depends on the client, right? So an annuity client might be a little older and may not be comfortable with that kind of technology. But then again, that I anticipate will change over time. And then the last thing is a streamlined suitability process. In fact, there was a recent study that I was reading about that's 6 in 10 advisors felt that simplifying that suitability process is really critical, and make it, again, that's a friction point. So when you think about the point of sale, I want you to think about what are the potential friction points in the sales process, and how do you make that easier? How do you sort of streamline that and make it easier so that they don't become friction points? And these are the three that tended to pop up the most, in this research. So let's go on to the last piece of the process, and that's the post-sale servicing. So this is once the contract is in force, right? What is the opportunity for technology there? Like how could things be made more streamlined, more easy for the FP? And there were two, and I'm going to bring them both up at the same time because they're kind of related. So it's ease of in-force management, right? That could be things like beneficiary information, address changes, changing the allocations, rebalancing sub-accounts, all that sort of stuff, right? And right now, a lot of them just go to the website. That's one time that they do go to the website for the carrier to make those changes. But there's also data integration into financial planning software, And is there a way of reducing that double effort? Like if I work with 5 different carriers, now I have to go to 5 different websites to make changes for the annuities that I have in force with my clients, or is there a way that this can all be integrated into my financial planning software where I'm spending all of my time anyway, and I could make those changes in that environment instead of having to go to all these individual websites, right? Especially if they're a producer, a high, very engaged producer. When I speak to people who are fewer annuities on their books, then they don't mind going to the websites. But when it comes to having a lot of annuity business and wanting to do it in one place where they're spending all their time, that integration piece becomes really important, right? And that's sort of going back to that slide a couple of slides ago, where it's about meeting them where they're at, meeting them where they're actually where they're working on a day-to-day basis. So I'm gonna just wrap up everything with sort of 2 really interesting, I called them trends, I'm not sure if they're trends, sort of points that we heard about in this research that was echoed in other research that we've done. And one is a name that keeps on popping up, and that is the name of Aspida. A lot of advisors in this research called out Aspida as really being a disruptor, right? Sort of, they don't, thinking about the whole process, thinking about that, pre-sale, sale, post-sale process, and making it entirely digital, right? From soup to nuts. So it's really changed sort of the expectations, I think, of advisors, where they're like, oh, this is possible, right? And this is one where they're like, I'll go to the Aspida website and do this because it's so easy, right? And that's where they're okay working outside of their sandbox because they know that what they're going to get from an Aspida is such a streamlined process. Granted, Aspida is my understanding a brand new everything, so they don't have the legacy of a large insurance carrier, but it does reflect that there is an appetite for ease of use. Make it easy. Like the contract is arduous, the process is arduous, and just having that sort of streamlined process that's fully digital has caught their attention and has kind of set the bar from what I see in terms of talking to some of these advisors, right? The second theme that we've heard here, and I've heard in other research, even more so, is something that maybe many of you are familiar with, but it's definitely something that's worth looking into. And that's something that's called Digital First for Annuities, which is an effort put out by the Insured Retirement Institute, the IRI, that's really looking to transform the industry by ensuring that annuities can be easily integrated into the everyday toolkits of the FP. What does that mean? Like, putting it into their sandbox, putting the annuity workflow into where the advisors are integrating with their financial planning software. And there were a couple of interesting stats that I found on the IRI's website that I wanted to just close with. And that was that 83% of financial professionals today use financial planning software, right? Actually, that number seemed low to me, but that's what they say. In a study they did in 2024, 83% of FPs use financial planning software, but only 18% leverage annuities in those tools, right? So when you think about an annuity and maybe using an annuity as an income vehicle, how is that actually reflected in the client's overall portfolio and overall income story, right? If only a fraction of those FPs who are using financial planning software are actually integrating or showing annuities in their financial planning software. So again, an opportunity, I think, to help, either integrating data into the financial planning software and or helping FPs understand how they can model annuities in their financial planning software. The other interesting stat they had on the IRI website was that 64% of advisors use portfolio management software to manage consumers' portfolio needs, but only a small portion leverage annuities in those systems. So again, there's that disparity of using the technology and then using the technology in the context of annuities. So I think that's it's an interesting, I'll call it a trend, to watch for in terms of what the IRI is doing with digital first for annuities. And with that, I went over time by a little bit. I hope that was okay, but that's it for this piece of the technology with the B2B audience. I don't know if there are any other questions from folks. in terms of
I
what we
don't
covered?
think so, Catherine. Looks like the questions happened during
Okay.
the presentation.
All right, great. Well, with that, as Brad mentioned, we'll send out the deck. And then also I'll put the word out on volumes 2 and 3 that we're going to do for similar, different industries, but sort of similar idea in terms of the impact of technology. The next volume is the PNC agents use of technology, and that's my colleague Christina Witzling. And then volume 3 will be group benefits, employers and technology with Amy Ray. Those dates have yet to be determined, but keep your eye on our LinkedIn website, and I'm sure you'll get an email as well notifying you about those two upcoming webinars. So thanks so much for joining me. I really appreciate it. Take care.